Hello, my name is Jason Donofrio. I'm the Vice President of Development for the National Marine Sanctuary Foundation. Very, very happy to be here, and I want to thank Hans and MTS. I want to thank Stuart and Zach and everyone that worked on this. But I also want to thank all of you. The ocean is one of the least invested resources on Earth. So the fact that you are sitting in here right now, devoting your time and attention to this, it matters. It matters more than you could possibly imagine, as we're going to discuss. So what I'd like to do now is invite our panelists up to the stage. So we have the Director of the Office of National Marine Sanctuaries, John Armour, who's going to provide perspectives from NOAA and the government. We have Sarah Patton, the founder and CEO of Blue Space, Inc. Sarah has two titles that you don't see very often together, but I love, which is marine scientist and entrepreneur. You very rarely see those two things together, so we're very lucky. Alyssa Peterson, co-founder and CEO of Sea Ahead, working to catalyze and build startups in the ocean. And Richard Keary, who works for ETF Advisors, the founder and their advisory firm, if you want to come up to the stage. So to kind of put a little framing on this before we dive into the questions, I made a bold statement saying that the ocean is the least invested resource in the world. But let me give you a couple of statistics on that. So my job, we're a nonprofit. So the National Marine Sanctuary Foundation is a 501c3. We're very much like the National Park Foundation is the national parks. The National Marine Sanctuary Foundation is to the Office of National Marine Sanctuaries. I've spent the last 20 years of my life working directly in philanthropy. So I don't have a lot of private sector experience. I have no government experience. My wheelhouse has been in private philanthropy. And I can tell you as a fundraiser, philanthropy will not get it done. There is not enough money to match the scale of the need or of the opportunity. A couple of statistics that might blow your mind. All the money that Americans donated last year, corporations, foundations, and individuals, only 4% went to nature. The ocean is so small, it doesn't have its own category. So it's 7% of that 4%. The ocean is 71% of the Earth's surface, but is 7% of the smallest giving philanthropic category in the country. There are only 38 non-government funders in the world that give $10 million or more to the ocean. 38. You could put them in this room. And the Packard Foundation is about half of that. So I am very excited to talk to these folks because I can tell you as someone that raises money for a living for the ocean, it's not enough. We must bring in the private sector. So to kick things off, I loved what Zach said, that the ocean economy is going to hit $4 trillion. Well, there was a case study done by Our Shared Seas, great funding report last year, 2025. They did a case study, and they found out right now the ocean enterprise is a $2.6 trillion market, but startups have only attracted $2.2 billion in venture capital. That means the market's open. So the conversation we're going to have today is, what do we do with that market, and how do we advance it? So I'd like to start first with Alyssa on, you've done a lot of work investing in companies, supporting early stage startups. What do you think we need to do more holistically to break down these different silos between finance, academia, science, private sector?
So only a big question.
Only the big questions.
Wow. Where to even start? I think to your point, one of the things that we try to do is to bring in money that wasn't otherwise coming into oceans, right? Because if we are all fighting over a tiny little pie, then it remains a pie slicing game. And I don't know about all of you, but I would like to make that a bigger pie so that we can all eat better. That would be great. And so the thing that we're trying to do right now is connect with people who otherwise didn't realize that there was an economic opportunity associated with the ocean because they haven't ever thought of it, but they love to scuba dive, and their day job is in biotech, or they like to, I don't know, we have an investor who's a free diver even. I was like, that's intense, dude. But yeah, so we try to connect with people who have a beach house or a, other ways that they connect to the ocean, but they don't realize that there is economic opportunity there. And they have different, each of them has different, when they realize it, has different ways that they want to deploy their capital. Some of them are willing to do that through their, their taxable assets, and others are not. And so they would like to do it through their charitable assets or other ways. And so we try to make sure that we have set up all the piping to make it easy for them to do that thing. Hey, Rick. That is the work that we're undertaking right now to try to bring in more capital, because I think in general, to your point, if we're not bringing in more capital, then we're not going to see the effects that we want to have as a whole.
Thank you. Yeah, I love that, growing the pie instead of fighting over the pie. Thank you. Yeah. Well, maybe Sarah, I'll go to you next, and then I'll go to Richard.
Hey.
Hello. Hello. Is this thing on?
I was like, did we break it? But I would love for you to kind of pick up on what she was saying in terms of how do we break down these silos. You wear two different hats as a business person and entrepreneur, and also as a marine scientist. How do we merge the two? How do we get more of that? How do we break those silos down?
I thought of this in terms of kind of folks up and down the capital stack is sort of where I thought about this. So, a lot of my career has been spent dealing with complex ocean challenges and having to bring together players that typically do not collaborate, have, conflicting mandates, are often in opposition to one another. And you have to find ways to bring these players together. And the first thing for me that is super important is if you can't understand each other, you can't find ways to collaborate effectively. So, that for me, that starts with incentives and really mapping incentives across the space. So if we're talking about up and down the capital stack to start, this could also be, across sectors or between science. But if you don't understand what's going to incentivize the other, then you're not going to be able to design tools and frameworks and structures that you can kind of align around. So I would say, the first thing that I would want to see more of is us really working to dig in and understand what motivates the other, what constrains the other, what constitutes value to the other players in the system, and then think about whether we can design a larger framework or start with smaller pieces that we can sort of rally around together, and then slowly build trust and then scale that trust to do bigger things together. So. That's not so much about silos with respect to themes, but with respect to up and down the capital stack, I would say. That's a good starting place.
Thank you. So Richard, you are, you're a financial expert.
That is me. I'm sorry. I'm trying to put it down, but I can't.
You're in the financial world, and you're an advisor, and you're advising many companies. I want to talk about comfort zones. What are investors really looking for? We've talked about solving for the missing middle, this knowledge gap. What are the things that you care about as an investor and an advisor to help people feel comfortable investing in the blue economy?
Yeah, so let me clarify a little bit. I'm not a financial advisor in the traditional sense. So what I do is I work with asset managers, indexers, stock exchanges, and I build financial products. So I build exchange-traded funds, structured notes, mutual funds that people can invest in. So you're getting the public money coming in, right? Individual investors coming in. And the challenge there, and we talked about data, well, financial data is a real problem, because nowhere in the financial data stack does there say this is a blue economy company, right? Blue economy companies are spread out across multiple sectors, in multiple places, and are never brought back into blue. I also work as entrepreneur in residence for the University of North Carolina in Wilmington. And we have a group there called the Alliance for All Blue about the blue economy. And I started working with them, and I asked the question, well, if you guys are all calling it the blue economy, how are you measuring it? right? We hear from the UN, we hear from the World Bank, it's $3 trillion, it's whatever that number is, but we're not getting a regular foundation of what's happening in the blue economy. So we built the UNC Wilmington Blue Economy Index that measures the global blue economy by using the largest companies making the most revenues from the ocean in a sustainable way. So we built the index around the World Bank's definition of blue economy. That index is just blowing everything away. We can go back to 2018 for the start of the data around that index. Since then, that index is up 151%. Our benchmark index, which is the MSCI All World Index, which measures the global economy, the whole global economy, well, that's only up 91%. So the blue economy is outperforming every other sector and economy out there, but nobody knows about it. And when I brought it into the financial world and say, hey guys, I built this blue economy index, and one of my colleagues who I have tremendous respect for looks at me and goes, Richard, what are you doing? We don't need another political index. Why would you do a political index? I'm like, it's not democratic values, it's the ocean. And he's like, then call it the ocean. I'm like, everybody else calls it blue economy. All the research is about blue. He goes, oh, there's research? I'm like, yes. So he's like, now this is interesting. I'm like, okay, let's go. But at the end of the day, where he came back to me was, no one's asking me for this. None of my investors are asking me for it. I'm not going to build it and hope they come. I need them to come before I build it. So there's this gap of information, this gap of awareness that we have to work through to get that group in. And then there's a longer conversation we can have later on about how that affects entrepreneurs and what we can do for entrepreneurs, because they're the backbone of what this economy is building. So
I have also bad news for what blue means in Germany, too. Something else entirely.
Yeah, I don't think I want to know.
So maybe we just call it the ocean economy from now on, I think. Stay away from the colors. All right, so John, I think last year you celebrated your 25th year at NOAA. You've been a tireless fighter for NOAA, for resources. I think everyone here has probably directly, or I know indirectly, benefited from your work and NOAA's work. You're also
I wouldn't say tireless, but
you're also, NOAA is housed in commerce for a reason. And NOAA does a lot of work with businesses. I think maybe something that this room would appreciate, being the director of ONMS and your experience with NOAA, what are the types of things you like to look for when partnering with a company? We have 18 sanctuaries. We like to call them 18 laboratories of innovation. And so what is ONMS's ideal corporate partner or investing partner look like? What would you like to see them bring to the table?
yeah, that's a great question. I mean, I think for national marine sanctuaries, within NOAA, I really think of national marine sanctuaries and perhaps marine protected areas around the world as safe places for investment, safe places for innovation. And these are places where NOAA and the government, and at least for the United States, NOAA and the government has committed long-term infrastructure, personnel, planning. We have small boat fleet. We have visitor centers where we can engage the public. We have advisory councils that are multi-sector, multi-stakeholder, so they bring together commercial fishermen with conservation organizations, academia with other government institutions from around these local spaces. And so it's in these places around the country, whether you're talking about the Florida Keys, where I just was yesterday, or you're talking about Pongo Pongo and American Samoa, national marine sanctuaries really have the ability to bring in businesses and investment and talk to all of these different sectors, all that have an interest in a healthy ocean and a healthy ocean economy. Right, and so I don't know that I can say, well, this business versus that business, but I think from my standpoint, businesses and for-profit organizations that are interested in sort of the ethos of what national marine sanctuaries do at a community level, I think they're all welcome. Honestly, I think we are interested in having these conversations with whomever is interested in having them with us. and talking about ways that we can, work together towards common purpose. And so, yeah, we're not super selective. I mean, I think if you are in the geography and you are interested in working with NOAA, we're game.
Good.
Absolutely.
Good to hear. Yeah, thank you. So based on what we've been talking about, Alyssa, your job seems really hard.
Tireless.
Tireless. And part of that is because we're talking about there's a lack of data, there's a knowledge gap, but you have to help support emerging startups.
Yeah.
So with the lack of data and maybe the lack of sometime investor demand, as Richard pointed out, what is the framework that you evaluate at See Ahead when you're trying to pick the startups you want to invest in or people you want to support and mentor?
So with, for most of our programs, we have about a 10 to 1 application ratio. And the thing that we are really focused on in our applications is the identification of an actionable customer need. So when I think about an actionable customer need, I'm talking about there is some specific person who is willing to use their budget to pay for something different because the thing that they're doing today isn't working. And so this can be really difficult to tease out of a startup's application, to be frank, because oftentimes the people who are applying come from technical backgrounds, which we love because we love the hard tech stuff. I believe that a lot of the applications in this space require unique skill sets and knowledge bases, whether you're designing new models of the ocean or other things. Like, this is not going to be done by vibe coding it. So the thing that we try to tease out of these really terrible pitch decks is whether or not we think there's like a real customer underneath it, because we can't solve for nobody cares. We can fix a lot of things, but we really just can't fix nobody cares. Team dynamics sometimes really hard to fix, but the nobody cares is the biggest thing. So that's what we're trying to tease out, and we can tease that out sometimes before the program, but a lot of times it happens during the program, right? And I think one of the biggest benefits of the program can be somebody deciding not to pursue something afterward, right? Because the market demand isn't big enough for whatever it is they want to do, and their talent is better served in our ecosystem somewhere else. Because we do see people jumping to other companies after they've made that decision. And we had it for one example of a company that wanted to do software for blue carbon projects. And that's just not the problem with blue carbon projects, right? There's a lot of other problems, but lack of software, not one of them. But you sort of need to poke at these pretty hard and introduce them to a lot of customers before you can really figure that out. And I think it's fundamentally okay if in the process of going through these programs we lose a few.
Thank you.
Yeah, if I can jump in there too, because we see it a lot. We're mentoring entrepreneurs, early stage startup companies all the time, and the biggest skill set they lack, especially if they're in a scientific project, is storytelling. Mm-hmm. How can you tell your story where you can engage the investor, you can engage the customer? When you sit there and talk about science, you lose them in 5 minutes, their eyes glass over, and it's over. So getting them to tell a story and learn how to tell their story. Yeah. It's hard, right? And you look at the VCs and private equity has in the room, they got a stack of these decks, a mile high. And they're going to take the ones who are telling them the best story. They're not about the data, and it's not about a lot of these other things.
I might jump in on that for a second too. Quick sidebar, little anecdote. I'm a mentor for Creative Destruction Lab, and we were in Vancouver, and this guy had a great idea, but he started talking about normal distributions and log normal distributions, which I could follow, but I was like, this is not where you need to start out, buddy. So I actually told him, I'm like, send me your deck, we're gonna work on your science communication, because he had a great idea, right? But so, yeah, following on from that, I completely agree with you. I think, what we're seeing a lot of too is these great innovations that have the potential to be aligned with a lot of different investment types, but they just, A, they don't do the work to understand the investor mandates as well as they need to be able to align. B, they're not being pointed enough with their alignment to be, sometimes it's like a resume. You don't send the same resume to every job opportunity, just like you wouldn't send necessarily the same story to each investor, right? And yeah, so that alignment piece is super important, and just the science communication is definitely something that I think we see needs a lot of work. Yeah.
Thank you. So I'm going to ask two questions that I think would be good for all the panelists to answer, so we can start with listen and go down. But the first is, what are the greatest opportunities from your vantage point, greatest investment opportunities or partnership opportunities in the ocean economy? And we'll have everyone answer. And the second question would be, what are the biggest barriers to realizing that opportunity? So Alyssa, if you'd like to kick us off, what do you see as like the greatest opportunity or something you're really excited about in the space?
I was just talking about this with another investor. I really think there's super interesting opportunities on the edges of this thesis, right? So there's like the really obvious, like that's an ocean, a blue tech company, right? It's, they got an AUV or some really, okay, you're like straight down the fairway here. But I think that there's a lot of really, really interesting opportunities that are sort of sitting at the edges that are not, they don't think of themselves as ocean technologies, but they are, because they deliver value either to an ocean industry or to ocean health, and because they contribute to infrastructure not breaking down, or they contribute to the protection of infrastructure that is there, or they contribute to the reduction of pollution getting into the ocean, but they do it way upstream, right? So they're, they don't think about themselves as ocean related because they don't go anywhere near the ocean with their technology. And so I think we like to push the boundaries of the thesis, because it also means that a lot more people can feel a part of the mission, which gets back to that first point about making it relevant for more people than feel it is relevant to them today, so that we can build a bigger tent to fit everyone in, so that more action and activity can happen.
Oh, thank you. John?
Yeah, just maybe a slightly different sort of spin on the question. I think, for me, when I think about opportunity as a sort of entity of the federal government, as NOAA, unfortunately, I think my answer is a little bit boring, but I hope people would love to hear it. To me, I think modernizing sort of our governance structures, within, and I can really just speak mostly for Office of National Marine Sanctuaries, but I think the same is true across government and certainly across NOAA. Some of our systems are so old and antiquated. I just know in my program, we have a system that we use to process permit applications, and I started it when I first started at NOAA. So this thing is over 25 years old. It has no sort of spatial capability. We have no idea if Richard's got a permit, Alyssa's got a permit, and they're on top of each other. And so starting with investing in some of these systems, I mean, I know it sounds boring, but even in some of our database systems and some of our tracking systems are so old and so antiquated. I think we could be doing a much better job of just doing a better job at sort of our governance responsibilities. So I would start there. Honestly, with in terms of when I think about the opportunities that we have to creating the climate and the conditions for these kinds of innovations and investments, I think we have that responsibility.
All right, so if you're a data or platform company, see John after.
See me after, my card's on the table.
That guy right there?
Yeah, Carl.
Yeah, can I
Please.
So Carl Goldman, former director, I use at National Ocean Service, so peer of John's. And I've got a company I'm mentoring right now, John, and they're talking to Stellwagen Bank's permit specialists. They're going to deliver permitting, reduce friction in the permitting system.
Yeah.
And they're looking at big picture permits, helping companies that are trying to do something in
That's
that
great.
space. But I'm telling them the bureaucracy because on a separate project I'm working on, we're interviewing people about the ecosystem of innovation right now. And one of the PIs I interviewed on purpose was talking about, he said, it's stupid hard when I go to do work in the ocean. I have to go to EPA, I have to go to BOEM, I have to go to DOE. And if it's DOE for energy generation, it's a different part of DOE than it's some other function. And so that friction-full permitting thing for anybody that's trying to innovate in the ocean is so hard that there's got to be ways we can streamline that and use modern tech, AI tools, machine learning tools to sift through that morass. But they're asking me for the people that could help them to understand the problems. And I'm like, those people are tired.
We're not tireless. Yeah, lots of caffeine over there, guys. Yeah. I mean, when I think of this issue, when I think of governance, I in my head I kind of I bin these things into two bins, maybe three. But one bin is like, what are things that we can do? Some of the technology fixes. And then another bin is sort of like the larger societal issues that are created by big governments, by our statutory authorities, by the Congress, and things that John doesn't really have the authority or the ability to control. Maybe the third bin might be funding. We don't have the funding to create a new permitting system. But I think that doesn't mean you don't tackle all three of those things. But some of the issues that you just flagged, Carl, are cut across all three of those things. And some of the most intractable issues are that second bin, where there are 50-year-old laws on the books. Some of that are designed specifically for ocean conservation, but some are broader, like the Paperwork Reduction Act, right? And like these other things that nobody really wants to talk about or hear about because they're boring as hell. But these are things that are really inhibiting our ability to actually process permit applications, and they add bureaucracy, they add red tape and time. Yep.
Yeah, Carl, I appreciate your comment because, John can speak more to this, but, we've obviously seen a massive reduction in both NOAA funding and NOAA staffing, but the mandates haven't changed. In fact, in the last administration, they added 3 new sanctuaries. So in fact, John's got even more work on his hands, but with less staff and less resources.
But I didn't have time to update my bio for poor Hans here.
Yeah. He's tired. Okay, he's tired. But I do think that is an opportunity. I do think that is an opportunity to actually force the government to work with the private sector in a more conducive way. And what we like to say at the National Marine Sanctuary Foundation is depoliticize America's public waters, to not have it be tied to any administration solely, but to have the private sector there. So I really appreciate your comment.
Can I make another one, which is in this, I was talking to John about it before. I'm talking about this more and more, but in we use the term ocean enterprise as a sister of the weather enterprise. And so the battles of the late 90s and early 2000s about the weather enterprises, some of those battles were private sector trying to stop NOAA from delivering higher resolution products and services and basically slowing innovation down so that they could try to argue and wall off that as
Monetize it, yeah.
And in the ocean side, we have a 2-3 decade later development cycle right now. We're going slower, it's harder, but it's growing faster than the regular economy. And there's all this opportunity, and there's a piece of the policy. I've worked with Ralph Rayner for years on this, and he's taught me we don't want a really bright line that they're fighting over because that's wasted effort and time. We should have that policy line be somewhat flexible and move with innovation because the technology moves faster than we can predict. So don't worry about that policy being perfect and get stuck in the whole policy. But then to your points, Susan?
Sarah. Yeah, that's okay.
Sarah, the things you were saying at the very opening really resonated with me in terms of the culture, the values of it. So I have this whole network of 11 IUCE regions that I was funding for 20 years to build an ocean observing system that complements the federal system and fits together. The culture and value of those people doing that amazing work is somewhat more academic. It is based in public service because that's required of every dollar that NOAA gives them.
Yeah.
And they might view companies coming in trying to do fancy stuff on top of that work as competitive. And that cultural values piece is really important.
Mm-hmm.
And I'm working on it and thinking about it a lot and trying to figure out how do we convene in this blue finance discussion the the types of workshops and collaboration, partnering across the ecosystem of players to advance the ball faster. And so I'm going to be doing it on an individual level with IU's offices, directors, to try to get them to see that I'll be showing up with companies that I'm making warm introductions to you with, because they might have something you want to work with. So talk with them and then tell them if it doesn't match up, but have a
Yeah.
conversation and move on.
Totally.
But I'm not there yet, so I wanted to raise that as an issue too. The policy should not be, we shouldn't worry about it too much. We should figure out how it works together faster.
Yeah, thank you. Richard, do you want to pick up on that and also add what opportunities are getting you excited in the space?
Yeah, so a couple of things. Let's just start with some of the conversation we've been having. We're talking about people with different objectives. They want different outcomes, but they have to work together. And from my own experience, it was interesting when we built this index. I had to bring in scientists. I had to bring in the university. I had to bring in academics. I had to bring in my business partners. And we all had to learn how to talk to each other. We speak different languages. And even though we mean the same thing, it doesn't sound like the same thing. And the other part of that, which is a little harder and it takes time, is when you have a partner, you do a public-private partnership and you're taking somebody from a different world into yours, there's a level of trust that isn't there. And we have to learn how to trust each other. And you talked about, having, defining your outcomes, being in the right space, you agree on something. Well, you have to be honest in that discussion. So you have to be trusting, you have to be honest about, yeah, you know what, I can't really make that happen. Instead of going, oh yeah, I can do that. Like, no, we have to have honest discussions. So I think that's one thing. Something that got me excited actually happened to me yesterday, which was fascinating timing-wise. I came down here, they're starting a new stock exchange here in Texas, the Dallas Stock Exchange. Sounds kind of catchy, they call it Wall Street, which they're trying to walk away from now. But what they're doing is fascinating, and I think it really is relevant to this group, because what they 2 weeks ago filed with the SEC is to have a listings business around interval funds. Now, an interval fund is a fund that can only kind of create and redeem once a quarter. So it's private companies inside of a fund, and then at the end of the quarter, you price it, and if anybody wants to sell or buy, here's the price. Because now because you're listed on an exchange, you're going to have regulations. So you're going to have transparency around that pricing mechanism and price discovery of those private companies, which we do not have in private company world. This is why the individual investors can't invest in private companies, right? And we've seen that play out now with SpaceX, right? Everybody wanted to get in SpaceX, and it's a $3 trillion company, and most of America was shut out from it because they didn't have access to it. So now they're going to try and give access to private companies. So our entrepreneurial projects that start to grow and start to build can now all of a sudden get funding from individual investors, smaller institutions. People who are shut out will now get involved in, right? So we're democratizing the private market space. And all of Wall Street, NASDAQ's trying to build a market, the New York Stock Exchange is trying to build a private market. So I think that's what excites me, because I think that will end up down at the entrepreneurial level and give them more opportunity to get to capital and
Greater
get that flow of
access.
capital moving.
Thank you. Sarah?
So I'm a big nerd. At the end of the day, I'll just be quite frank about that. That's my science background. So a bit of a preparer over here. So I did actually kind of pull up 5 things that I think are sort of the big barriers. And for me, again, I take a systems lens on this. So again, the incentives not being mapped was a major problem. Capital pathways not being structured well for alignment. So if we're going to be doing sort of blended finance planning for the stage that comes after, and actually I heard the speaker yesterday speaking about that as well. The pipeline not being as investable because of that poor translation. Risk is a major issue. It's unclear. We've got data issues there. It's hard for people to see themselves and be able to meet their mandates given some of the opacity of information that's available for folks to evaluate risk. The fragmentation that you were talking about earlier, major problem, very siloed, limited pathways for participation across themes and up and down the stack. And again, coming back to data, which is, really, I think, one of the biggest problems. So with respect to problems, I would say those are the key ones that jump out for me. And so biggest opportunities, when I thought about this, yes, sectors are important, and there are verticals I could certainly speak to. But for me, the biggest opportunities are addressing these sort of systemic structural issues that are preventing capital from flowing in the way that it could and should. There's a lot of will out there. There's a lot of money out there. But there's just, people are having a hard time. Investors, I did a lot of primary research last year talking to different investor types, and they were having a hard time seeing themselves. And some of them were quite clear, like the VCs. They sort of could figure out where to sit in that. But a lot of others weren't really sure, well, how do I come in, and who comes before me, and what are the milestones, and what does that look like? So I would say the two biggest opportunities, one is sort of addressing these structural issues, and that can look a lot of different ways. And then the second one is the data. So we have a massive amount of ocean data. In one of the roles that I played a number of years ago, we had to assess the risk to every species under DFO's mandate to oil. And so one of the first steps was gathering all the data for this under DFO's mandate. Fisheries and Oceans Canada. Sorry, I forget I'm not in a Canadian room. And so we had, you can imagine, hydrographic surveys, researcher notes, hydrophone data. There's all different types of data. And similarly with, a lot of the uncrewed vessels and things, there's a ton of ocean data out there that we could be using to help capital to flow, but we really need systems in place and tools that normalize those data and make them useful for comparison and make them useful for risk assessment. And I think if we can do what we can with the data we have, but then also develop frameworks for sort of standardizing how we collect and report and standardize data moving forward in a way that things can be compared to one another, I think we'd be able to move money a lot faster. Sorry, long answer. But
That was great. Thank you.
It's good. If I can jump in there real quick, because there's a saying that we use in the financial markets all the time, is simple sells. And that's the other thing, is taking all that data, right, all that thought that goes into it, the complexity of it, and bringing it to an investor in a simplified format so he can understand it. And I think that's one of the things that's missing. We all get it, right? And we're like, hey, come on, how do you not get this? I'm like, no, we got to talk to third graders, and that's when investors will start to come in. It's sad,
and fair enough.
but that's
like
the reality
we can't all
of
be
it.
expert in everything, right?
Right. No, we don't know all. Right.
But there's a lot of groups working on this, like Coastal Measures, out on the East Coast, and a number of others that are working to gather and sort of standardize these data. And I think we're not far off from having what we need in that space.
Yeah, and the other part of that conversation then, for a lot of investors, because we think, okay, they need to be impact investors. Well, a lot of investors, they just want returns. Like, they're not as interested in you're not interested in the impact, but I'm interested in a return on my money.
That's right.
So if you show them the returns,
That's right.
they're not going to be over concerned about the science behind it.
That's right. Yeah.
Melissa, what are your biggest barriers or challenges?
So our focus right now is on two areas. One is this, adding new investors into the space, right? And so I focus a lot on that and on telling them a story that puts them puts them and lets them allow them to see themselves as caring about this space. And so, finding these people is actually a work unto itself. And then the barriers on the startup side that I see are in getting commercial projects built, because there's a lot of enthusiasm at the early stage, right, when folks are spinning out of universities and there's accelerators, et cetera. But when they try to get past that point and into the commercialization part of their journey, a lot of them don't have the experience or expertise on their teams to be able to do the work of integrating into someone else's workflow. So it's not just enough to have a cool widget. Your cool widget has to work in all the other things that your customer does. And if it if it causes too much friction amongst the people whose day job it is to do something else entirely and don't really care about whether or not your thing works or not because it's not their budget, so they don't care, right? And so if it doesn't work with all the workflows, then it's not going to happen at scale. And so a big part of that is getting enough capital to those companies so that they can hire talented people who know how to do that and add to their, so as one of the other conversations I had earlier today was like, so there's not so much plate spinning, right? By like super talented CEO who's like, hey, keeping all these going, right? And so we got more of a robust team underneath those people so that they can actually build the thing and not have the first encounter with the market, sort of punch them in the face, right? And so we want them to be successful through that process. And I think that figuring out what infrastructure and capital we can build around them so that they can get over that jump to commercialization is a work of, is right now where I see the work at hand.
And thank you. And John, I'm going to get to public investment in a second. This question is for you three, though, more on the private investment. You talked about impact investing. So aligning your investment with your core values, ESG, environmental, social governance. We have seen that industry, so not just specific to the ocean, take a massive hit, especially in the United States. European markets are still holding quite strong. But the U.S. has seen a significant reduction in ESG investments. Even the term ESG, I've been told by some financial firms, is like persona non grata. We can't even say that anymore at our company. Has that had an impact on what you all do in the ocean space? So I'll start with you, Alyssa.
No. Because I'm dealing with individuals for the most part, and I would say that the backlash has actually released individuals to do things they might not otherwise have done because they're mad, and that's kind of fun. I like having those conversations with people who are mad. Yeah, like let's go, right? Like let's go. So anyway, I think that actually has not been a problem with the individual side of things. It's more for people who are raising institutional capital where that comes into play. And I would love to have that problem, but we're not that big yet. So that's not really the conversation I'm having right now.
Richard, has it affected you at all?
It affects a little bit in the conversation, and you switch it. They're like, oh, the blue economy, that's environmental. You're a bunch of environmentalists. I'm like, it's an economy. Yeah. It's an economic, we're talking about economic development, right? And what works behind economic development and what we need. I said, you want to go fishing? You better go fix the water, so otherwise you're not going fishing. I don't care if you're red or blue or purple, whatever, right? It affects all of us. The other thing is, I've seen it throughout my career. We've seen changes in political parties and political winds. The winds are going to shift again. And when they do, we need to keep working in this environment, because when the winds shift, we want to be ready for it. We want to build a pipeline of activities, of entrepreneurial companies ready to go once all of a sudden that money comes back to us, right? That we're ready to deploy it and go. So I see it as an opportunity for us to kind of reset ourselves, think about what's coming tomorrow, and be ready for it.
Awesome. Sarah?
Yes, is my short answer. Yes.
It's been a challenge.
Not a challenge, but it has been a design consideration, for sure, I would say. So, I'm actually a whale biologist by academic training, and I've worked in a lot of nonprofits, kind of at all levels, and spent a lot of years talking to people about how they should care about this thing because it's the right thing to care about, and that works with a small sliver of Earth. And truthfully, but when we started doing more cross-sectoral work and really, as I said, trying to figure out what levers to pull, understand incentives and things, it became very clear that, this makes me sound bitter or jaded, but I'm not at all. It's actually very, it was like a motivating realization, is that, effort is going to go where returns are, where money is. And, we have a lot of opportunity to reframe the conversation around that. Unfortunately, the science isn't quite where it needs to be in terms of like the arguments around ecosystem goods and services and, monetizing, different nature-based solutions and things like that. But, we are definitely moving in that direction. I think there's a strong recognition academically and economically that these things need to be valued in ways that can be put onto, P&L sheets, basically. So for my company, we very deliberately work with startups that can stand confidently among their peers with respect to ROI, because I think that we need to change the conversation a little bit and have impact flow as a result of good investments. So, do well by doing good kind of thing. Yeah. And so I actually don't think it's a problem. I just think it's in terms of money not flowing, I think we just need to pull different levers and design deliberately to keep the money flowing.
I totally agree, right? And it's a matter of communication for the startups
Totally.
too, because
alignment.
There's like nobody buys like the general do-gooder thing, but they buy the power of the solution to someone's problem, right?
Totally.
And so, the language needs to reflect the opportunity. And if it doesn't, if it just sounds like kind of like, oh yeah, and if the colors are too soft and like, I think it's so funny because a lot of our companies have rebranded now, and the rebranding is much more aggro, which is really funny. It's just like a really weird time, right? But yeah, like everybody's colors got darker, a little grayer, they're a little less green, and it's so interesting, right? Because like if we're gonna take this thing to the next place, it has to feel like the good stuff fell out the back, like while we were taking over the world, right? And I think that's just the zeitgeist of the moment, right? And it's how we add more fuel to the whole thing.
That's very interesting insight.
Yeah.
Richard, you want
Yeah, I just, real quick, I had an interesting comment in a conversation with a local politician in Wilmington, and we were talking about climate deniers. And he said, no, we're not climate deniers, we're budget deniers. We recognize it's there, we see it, we all see it. He goes, we just don't want to pay for it, and we don't want to be responsible for it. If we say, yes, the climate's changing, and we don't fix the seawall, and something happens, we're responsible, and insurance costs go up, and there's all these other things. So it's not about the climate denying, it's about the budget denying. So it's a fascinating comment.
Risk mitigation.
that's well said, Richard, yeah. So we talked about private return on investment. I'm going to turn to John now to talk about public return on investment. So, national marine sanctuaries are similar to national parks, but it's different because when you go to a national park, you drive through a gate, you pay a park fee, or you have your national park pass. When you go to the Florida Keys and you just go into the water, you're in the sanctuary. And so a lot of people think either they make no money because we don't charge for it, or they're walled off and protected when in fact they're open for multi-use. So can you talk a little bit, I know you and I have had many conversations about this over the last year, just how big of a priority it is for you and NOAA to communicate the economic return on investment to the communities in which the sanctuaries exist, and like what that return looks like?
Yeah, absolutely. I think part of it does start with awareness. I mean, you're right, Jason. One of the biggest challenges we have in national marine sanctuaries is a lot of people don't know they're there. Don't even know we have this thing called the National Marine Sanctuary System. You could be in a sanctuary and not even know you're in a sanctuary, right? Which is nearly impossible in a national park. And so I think one of the things that keeps me up at night, and one of the biggest challenges that I have as the director of the National Marine Sanctuary System, is trying our best to raise that awareness. I have as a goal that, so oftentimes when I'm on a plane and I'm wearing this shirt with the NOAA logo and the sanctuary logo, someone might say, what is a national marine sanctuary? Oftentimes I say, well, it's like a national park, but we're in the ocean. So my goal, I'm saying it here, is that one day the director of the national park system is going to be on a plane and someone's going to ask, what is a national park? And he or she's going to say, well, they're like national marine sanctuaries, but just on the land. So that's my goal. That's my goal. We're not there yet. We're not there yet. It's a good goal. Thank you. I can dream. Okay, we can dream big. But that is important. That awareness is super important. That storytelling is super important. And when you talk about return on investment, right now, so we get our funding, like every other government agency, through appropriations process, through the United States Congress. Our budget lately, over the last few years, has been about $67 million. And so the question is, what, as a congressperson, what if I'm the chair of the House Appropriations Committee or the Senate Appropriations Committee, what do my constituents get for a $67 million investment that taxpayers are putting in sanctuaries? And admittedly, so that answer is more difficult to, that question is more difficult to answer than you might think. And to me, it's equal parts data gathering, scientific, sort of technical question to answer, but it's also about storytelling. Right? It's about taking those data about fisheries, about shipping, about recreation and tourism. The economy of the Florida Keys is inextricably linked to a healthy ocean ecosystem. The economy of the Florida Keys, Monroe County, Florida, is over $4 billion recreation and tourism economy. That economy is supported by a very small investment. It's just a fraction of that $67 million that NOAA puts in to the Florida Keys to support healthy corals, healthy seagrasses, and these are the things that most people are going to the Florida Keys, aside for the ones that are just going on Duval Street. But these are the people that are going there. They're going to fish. They're going to scuba dive, and you're not going to make money off of those enterprises if you don't have a healthy ecosystem. And so we do have some of those stories that I think to many are somewhat compelling. But it's telling that story at a larger scale that I think is our biggest challenge right now. And this is really something that the head of NOAA, Dr. Neil Jacobs, the NOAA administrator, has really challenged me and my colleagues and my boss to really, what are those messages that we can say at that system scale to try to help congressmen and people and their constituents understand that the investment that we put into our national marine sanctuary system is worth it, 10, 20-fold.
That was great. And I think that aligns well with what Alyssa's saying is, there's some opportunities that are very obvious. This is an ocean company. This is an ocean project. I think what you both have gotten at is a little bit on the edges. So thinking about things that maybe don't take place directly in the ocean, but are related to that resource, hospitality, tourism, recreation. I mean, we mentioned Stellwagen, the whale watching industry alone. All of those things exist by having these vibrant ecosystems.
Well, and I think to that point, Jason, a lot of the people that are going to the Florida Keys to fish, for example, this literally just happened to me. I was on a plane. We were landing in Key West, and I asked this guy. He was from Indiana or something like that. What are you going to do here? He's like, I want to catch a tarpon. Right. So the point is, he came from Indiana, flew to the Key West to catch a tarpon. He didn't know it, but it was in the Florida Keys National. He does now, right? But because I asked him. But that's the point, yeah. Right? Is this isn't just a coastal issue, right? And it's not just a coastal solution. And to your point about bringing in folks on the edge, I mean, so these folks that like to scuba dive and fish, they're coming from all over the country. They're not just, in fact, probably most of them are not coming from the Florida Keys themselves. Most of these people are coming from Indiana, Oklahoma, Colorado, you name it.
Oh, that's great. So question for Richard, Sarah, and Alyssa. And the question is, who's missing from the room? And I don't mean this room. I mean the rooms that you are traditionally in. What are the industries or the stakeholders that you traditionally do not see at the table that you think should be at the table? Richard, I'm going to start with you.
Scientists. That's what we're missing. You're asking finance guys to break down the blue economy into sector, subsector, and they have limited data. They look at the numbers and they come up with no idea if it's actually this company is related to this company is related to that solution, right? So we need the scientists to come to the table and start building out thematic indexes, thematic sectors. Every publicly traded company, there's what they call a GICS code, G-I-C-S, Global Industry Classification System, right? There's nothing in there for blue economy and such. So we almost need to sit down and build a blue economy classification system.
An inventory of assets.
As inventory of assets, so any stakeholder doesn't have to be an index. It can be a DAF building a portfolio, saying I want a portfolio of people in ocean robotics and people in certain aspects of climate tech, and give them targeted solutions for what they want to invest in. So I think we're missing the scientists.
Sarah?
I hesitate a little bit on this one because I am not 100% clear on exactly what role they play, but I do think that we need insurance at the table. Again, in terms of the mechanisms and exactly what those, how their participation is applied, I feel like I'm not expert in that, but I do feel like we need more de-risking mechanisms at the table. So I would say insurers. Also groups that are in a position to, in alignment with their own mandate, work on some of these structural issues that need to be addressed. So individual investors are going to have a hard time putting a lot of time and energy into building out these frameworks and structural pieces, or intermediaries like, our company. We can do it on a deal level, but, there is the One Ocean Finance mechanism, and they're working on some of that, and there's some other actors that are putting some time into that. But I think we need more players that can actually start to address some of these structural issues. And there are others, but I'll leave those to my colleagues, yeah.
Yeah, and really quick, just by show of hands from the audience, who here has heard of parametric insurance? Raise your hand. All right, that's good. Usually there's no one, so this is, I can tell we're in the right room. Yeah, I appreciate your comment.
I guess I'd just build on the insurance point and just say more of the users of the technology, right? And often in rooms with lots and lots of startups and like early stage investors, and there's no corporations that would actually buy or use these things that are present. And so that is a gap, I think, for our conversations if we're not actually having the people who use the technology or will use the technology or could acquire the technology present amongst us.
So what are the opportunities? You've talked about different thematics. You guys have talked about some of the things that get you excited. But I think to help frame some of the breakout sessions, what are the opportunities we should be discussing later today as a group? In terms of, so we've talked about the different verticals, but it's specifically on the opportunities, what is ready right now? We kind of know what we need to build, right? So we need more data. We need to solve for the missing middle, the knowledge gap. So we know what to work towards. What's ready right now? Sarah, maybe I'll go with you first.
Oh, don't start with me on that one. I'm not 100% clear on your question. Do you mean which technologies and such are ready to deploy right now? Okay, well, I mean, certainly there's a lot of blue tech solutions out there. I'll throw that one out. There's a lot of, that speaks to the data. There's a lot of opportunity in data for more collection, better assimilation, and that's ready to roll. And I think that could unlock a lot. So I'll start with sort of the blue tech side, and then pass it on.
I actually love that to be the next index I built, was the blue tech index. Right. Rather than going into the technology side, whatever, I want to go into the human side of it. It's the concept that we all talk about, the whole week here, public-private partnerships, and getting the right people to the table with the right stakeholders, with the right outcome, a pathway for execution, and consolidating that path to success for that partnership, and structuring it in a way for success. And again, like I said, bringing the science and the academics and the business people together to learn to talk to each other and to build something together, I think that would make a profound difference.
John?
Yeah, kind of building on what Richard said and kind of hearkening back to something I said earlier is just, I really feel like national marine sanctuaries and place-based management in the ocean is a really good place to start. Obviously, I'm biased, of course, but These are places that are set up and designed, to sort of lean forward and consider sort of new and innovative ways to bring people together. We have our advisory councils, we have infrastructure, and these kinds of things. So to answer your question, like what's here now? National Marine Sanctuaries are here now. We have 18 of them all across the country that I think we're willing and able and ready to help foster this kind of innovation and these kinds of conversations that need to happen.
How many people know there's a marine sanctuary in Texas? Yeah, so about half the room. Less than parametric insurance. So we got some work to do.
All right, challenge accepted.
We got some work to do. Yeah.
Flower Garden Banks National Marine Sanctuary is about 110 miles off the coast of Galveston, Texas. So yeah, check it out.
Yeah. Alyssa?
It does.
I think there's a really interesting opportunity for us right now in coastal resilience, because it's an area that doesn't shade any particular color, right? And it affects red states often more acutely than it does blue states, depending on where we're talking about. So that's an area that we've been spending a bunch of time on. So we have a new program associated with that because we believe that that's something that we could so an area we could focus on while we're waiting for the wind to change, as we've been talking about earlier. And I'd also like to see, I think, more attention to, like, where is the actual, like, money being spent right now in terms of, like, the acquisition of technology, right? And so I've had this argument a lot, right? Because a lot of the money is being spent in the defense space, right? And so that's shifted a lot of the energy toward defense applications over other kinds of commercial applications, because so much is flowing that way. And then you've got the oil and gas sector, right? And so if we're looking at who the big spenders of things that are happening actually in the ocean are, how do we bring more of those folks to the table to steer that conversation so that we get the things done that we also want to get done while they're spending?
So I have a few more questions, but I would like the audience to start thinking about questions you might have. So we'll turn it over to folks in about 15 minutes to open it up. But a couple more questions. So I'd like to talk about geography. We're here in Texas, but the ocean is global. And so I am curious where you are seeing most of the investment activities in your own portfolio or in the space. Is it in the United States, outside the United States, or particular regions around the world in which you see these companies emerging more, and why might that be? So we'd just love to get your insights on geographical representation in the space. Sarah, I'll start with you.
Well, there's a lot of activity happening in Europe on the investor side for sure right now. Obviously, political headwinds and tailwinds are at play in different places. And just different sort of mandates for different countries around what they're trying to build out in their economies. But so yeah, I'll throw Europe on the table and sort of tie that to politics and mandates. But there are other active areas too, so I'll leave some for my friends here.
Yeah, I'm going to go to Europe as well. When you look at like Norway as an example, they have a government agency called Blue Economy, right? It's part of their government. It's part of their mandate. They have Innovate Norway, a large group that travels the world looking to create partnerships around blue economy solutions and such. Those sorts of partnerships I see in Europe more than anywhere else. And we look at the geographic breakdown of the index, which again is based because of large publicly traded companies are the big exchanges. So it is Japan and the US at the top. And then after that, you have your Scandinavian countries, you have Switzerland, and you have Korea. It sort of goes in that order in terms of what they're doing in the blue economy. So,
John, obviously your mandate is U.S., but do you want to add anything to that?
Well, yeah, I think if I understood your question, correctly, Jason, and I'm translating it into sort of a more government, U.S. government agency focus. Again, just I think reiterating to, the political folks from the interior of the country, and making sure that they see the value in ocean investment, and some of it's there, right? I think we have really good, really cool success stories where we have members of Congress from Colorado and New Mexico that are really engaged in ocean conservation issues because their constituents are. Right? Like there's no accident there. And so, I would say, to me, where we want to bring in, some more of that, we need a lot more of that, honestly, again, in order to be, successful in the long term.
Melissa?
Also, I'll throw Singapore out there on the table for consideration. A lot of the startups that we see that want to have an Asia presence are setting up there for, I think, fairly straightforward reasons, right? Because Hong Kong is not the option anymore that it was when we first got started. And so I think there's a lot of really important activity happening there, both on the investor and the startup side of things, because also there is a fair number of customers that are, present there.
In on one other as well, because how dare I not mention Canada? Yes. How dare I not mention Canada? Don't tell on me if there's other Canadians in the room. Canada is doing a ton as well. We've got a lot of political will behind blue in Canada, a lot of ocean innovation happening there. I guess I was thinking about it more for where am I seeing the money flowing, but Canada rocks in this space right now too. So yay for Canada.
And there's a lot of public sector dollars flowing in Canada.
It's true. That's what I mean with the political will. There's a lot of support for startups. There's a lot of interest from investors there as well. So, yay, Canada.
Analogy for you, it's a kick, save, and a beaut.
What's that?
That was a kick, save, and a beauty.
Thank you. Thank you, yes. I see that there's a camera in the back, so I don't know who's going to see this. Yay, Canada. Go ahead.
Yeah, we love Canada. And, we have 2 sanctuaries in the Great Lakes that, share the jurisdiction with Canada, so very much connected. All right, I have a few more questions, but I want to offer the audience an opportunity to ask questions. So go ahead, sir. And if you could just introduce your name and who you're here with, that'd be great.
Yeah, sure. My name's Ryan Jeffrey. I'm with Generator. We want to run a program, Accelerator in the Great Lakes. So actually, my question is to build off of the last question. I grew up in the Midwest. I went to the Great Lakes, went to the lakes all the time. I think we're talking about, boosting the blue economy and investment in that space. A lot of the conversation, rightly so, is around the oceans. I'm just curious, from your perspective, I think the Great Lakes in particular are often overlooked, but the importance of the Great Lakes can't be understated, right? 90% of fresh water in the U.S. comes from the Great Lakes. What do you think we need to do in order to better tell the story around the importance of the Great Lakes and lakes in particular, and what are we doing wrong in terms of how we tell that story?
Yeah, that's so interesting, right? Because we've been historically bifurcated in terms of these are the water people and these are the ocean people. And last I checked, they were, pretty related. So I think that's a really, there's this sort of false separation amongst us, right? Because all the water focus on wastewater management and wastewater and treatment and all of that is directly related to what ends up happening in the ocean and the effects on ocean life. And so I totally agree, right? I think there is totally an opportunity here for us to adjust our conversation, particularly as with all of the focus that's been going on these days around water use and data centers and grasping onto what the what everyone is talking about to try to pull people in this general direction of caring about these topics, right?
I just want to jump in on that too. I mean, we have in NOAA we have a saying about the Great Lakes: unsalted and shark free. right? And sort of what we're getting at, and it is literally unsalted and shark free, but the Great Lakes for NOAA in general, and for me in particular in the National Marine Sanctuaries, it's been a huge opportunity to reach parts of the American public that would otherwise not care about ocean conservation. These are places also where literally, because it is salt free, like you can test things in the Great Lakes that you would not dare test in a marine environment. And so we use our national marine sanctuaries in the Great Lakes as really these great test beds. And in fact, a great example of that in Alpena, Michigan, that's sort of our headquarters for Thunder Bay National Marine Sanctuary, which is in Lake Huron. Every year we host Silent Swarm, which is a U.S. Navy defense-focused sort of test bed of all kinds of UAV, underwater vehicles, all kinds of things. 600 people descend every year on this tiny little town of Alpena, Michigan, doubling the population, because the National Marine Sanctuary has the right environment to test a lot of their equipment. And so I think there's a lot of other examples like that around the Great Lakes where we can sort of get together and tell these stories about how important these places are.
And I think there's a business aspect to it as well, right? So the last several years, we've had a lot of disruptions in the supply chain. And that's something that hits everybody, and everybody understands that now and feels that. So you draw a line between supply chain and the Great Lakes, you'll start to get people to understand the economic value of the Great Lakes, that it's not just for recreation, that there's a great purpose that goes on there that they never really thought of or recognized before. And now, since supply chains are top of mind for everybody, that's a good place to go.
I don't think I have much to add to that, actually. I think you guys have covered that well, and not being a freshwater and Great Lakes specialist, I feel like you guys have covered that.
Well, yeah, we're going to go to you. But I do appreciate your question, because also, if anyone heard Bob Ballard speak this week and he got you excited about finding shipwrecks, some of the greatest, most well-preserved shipwrecks in the world, right, are in, and one of our sanctuaries is called Wisconsin Shipwreck Coast and Thunder Bay, and because it doesn't have the salt and it's cold, these are well-preserved maritime artifacts. It's a museum there, so it's also really cool. Were you going to ask the question?
So I had a lot of thoughts, and really appreciate everything everyone said. I'll try to distill down to 3 things. Richard, when you talked about who needs to be in the room to be the scientist, my initial thought was we just need to combine our rooms.
Correct.
I find the exact opposite in my experience. And then on the point that you made, Sarah, about the insurance and reinsurance, so I completely agree. I think that's a really, really important point. I actually mentioned that when I was speaking about really trying to get them involved. Just in my background experience, I think, and you mentioned sort of not being quite sure about the role they play. I think the really important role they play is they are sort of the interpreter, like they help internalize environmental risk and securitize it to the actual financial system. And that's really, really a way of, I mentioned this idea of internalizing externalities, and I think the ocean is the ultimate externality, it's the ultimate common good. And I think that insurance and reinsurance should play a really, really critical role in that. And I know I've talked with Stuart a lot about this, and it's something that we really want to focus on getting more involved in. And then another thing I wanted to mention is we talk a lot about how do we get some of these ocean adjacent or ocean curious folks kind of involved. And I think and having talked with a lot of investors, and both from impact capital but also more institutional funds on this, is that there's this truism, right? You manage what you measure, but I also think you could sort of turn that into finance what you measure, and understanding kind of KPIs. If you get down to brass tacks for a lot of these investors, they don't just it's easier to probably talk about thematic investing, but they actually have like these well-defined key performance indicators of what they're trying to do with their investments. And a lot of traditional, I've seen these like more of the traditional green investments of like, well, these are the kind of core things I care about, and I know about the green space, the green investment, landscape. So I'm going to sort of try to pursue these goals in this space. But what they don't realize is quite often, like, there's very, very low hanging fruit into blue space, I'll call it, that really addresses those key performance indicators that they're trying to address. They're just not familiar with that. So I think working with a lot of small businesses, companies, to basically sort of really understand to this point of like, what are they trying to achieve? You can actually map, and this alignment issue we talked about, you can try to map what you are, the actual impact of your technology, your product, your solution, to some of these key performance indicators that they're looking at. And it really starts to open the mind of a lot of these investors to say, like, oh gosh, I didn't realize this, but like, this is kind of the same thing. Like, and I think that has the potential to unlock a lot of capital into the blue space that's just kind of sitting there late because they kind of see themselves traditionally as green, to use sort of generic terms. But those are the three things that kind of came to my mind as I was listening to this panel. But I really appreciate everything you said.
And I think what's interesting, Zach, too, is like going one more further, which is that you measure what you value. So because measuring costs money. And if we don't value something, then we don't bother keeping track of it, right? And we don't bother like going out to figure out how many or what of that thing there is. And so that's a big gap right there, which is to say, if we haven't valued biodiversity, then we don't measure it. And if we haven't valued those things, we don't measure it. And so that's where I see the role of government is to set the value system, right? Where then you go and you measure the things so that then we can innovate to manage them, right? But if we don't take that step, then we're not going to get the outcome that we want.
Sarah, you want to say something? Then we're going to go to Stuart.
Yeah, I'd just like to talk about 2 points that you made, actually. One with the insurance piece. Like, I do understand what they traditionally do, obviously, right? But I think that there are new ways that we can engage insurance. And I think that when we're looking at some of these structural things and some of the barriers, I think that there's a role for insurance that might be novel that we can employ in this space. That's what I'm hesitant about, is to name that specifically, because I think I need people smarter than me to really that know insurance well to sort of dig into that piece. But the other piece that I wanted to just touch on when you were talking about, alignment and such is when we're talking about breaking down silos, whether it's, vertically or horizontally. I also make PowerPoints with my hands. Yes, I know, we're aligned. One of the things that we didn't get to touch on that's a bit of a departure, do I have space to slightly depart? Okay, is culture. So I think in finance, for very good reasons, fiduciary responsibilities being not the least of them, people stay in their lane because, and the culture is such that you better be expert. Not being expert for, understandable reasons is very frowned upon. But what we're asking is for this space to evolve, and we're asking investors that don't typically work in another vertical to consider investing, horizontally in particular, or working vertically with folks they haven't before. Now, we talked about the fact that we don't have necessarily the frameworks and structure in place for that, but we also don't have the culture in place for that. And so I think, one of the things that we're going to have to kind of look inside about is how do we create a growth mindset in this space? How do we make it so that it's okay to not be expert? Like if you've always invested in wind, but you're curious about aquaculture, what are some low impact ways? How could we decrease the cost of participation? Whether that's reputational or with respect to actual returns. So, thinking about, and again, it comes down to understanding what, again, mapping incentives and such, but really, we need to find ways to better support investors. So we're good at supporting startups. We have accelerators in place, but we don't have a lot of mechanisms in place like peer mentoring, low cost ways to participate in sort of an exploratory way, like a small allocation that would allow an investor trying to invest in a new space to sort of go through the due diligence process and shadow, peer-to-peer learning, things like that. So I think without naming every possible opportunity, I do think we need to find ways, if we want to move investors horizontally, to lower the cost of participation, change the cultural mindset a little bit.
I'm going to go to Stuart, and then I'll go to Millie. And before I do that, I want to congratulate Ocean Enterprise, World Ocean Council, and MTS. I just heard two people say that they're not typically in the same room together and in the same room today. So I think that's a definition of success. Well done. And be in more rooms together. So Stuart, and then we'll go to Millie, and then we'll go to Sam.
I'm just going to pick up and ask the panel broadly a question because you've dug into some of the thematics. It's mostly been around the startup innovation space and kind of national policy, rightly so, right? And I think what we're reckoning with a lot is with port cities and corporations, where we spend a lot of our time, there's also an entire sort of procurement, understanding, storytelling, ease. And I think I'd love to hear your reflection on getting to that kind of middle space. If we're talking about these two axes, there's kind of a space in the middle that could make it easier. And what of your experiences, you may have them individually with cities and ports and others, allows to kind of integrate even further who's in the room, but they're not right now, right? So just a reflection from you on that. You've been at a very national level and you're at the kind of innovator and VC level. There's a lot of space in between and a lot of projects and a lot of money to kind of their own valley of death. How do we work with that?
One of the things I've seen around ports is the technology and the work being done there gets categorized under national defense and not under blue economy. That's a great concern for defense, access to ports. So a lot of the technology being built is around national defense, DoD projects, and those types of things. So they sort of get left out. In constructing the index, there were a lot of ports that were made the cut in the index, just further down the pile, so they're not in the actual index, but they're on the list. So they are out there, they are doing good things. But like the port in Wilmington, they're, as we talked, they're in their silo. They don't come into our programs at the university. They don't come into the sector with investment ideas. They stay in their silos.
Yeah, I think one of the challenges that I've observed there, especially, and I'm really zeroing on the port part of your question, is this, and I believe a misperception that there is a zero-sum game between sort of conservation and environmental things, right, and defense and economic growth on the other side, and that the two are inherently conflicting. You cannot have one with, and you cannot have both of them, and I don't think that's true at all. And so I think for me, maybe I'm not really answering your question, but really adding more to the challenge, which has been really trying to get those folks to see it as a win-win, right? To see safe, reliable navigation as a necessity for our country, and one that also supports, if done correctly, will support generations to come, right, and will support healthy recreation and tourism, a lot of which happens adjacent to ports, right, not in ports per se. And so I think that the challenge that we have as, well, again, just kind of speaking for NOAA, is really just reinforcing this win-win idea of ports being really on the forefront of not just maritime commerce, but also conservation and the role that they play in that. And I think storytelling is part of it. Also recognizing that a lot of their customers and their constituents that use the port also care. They're also going and trying to fish tarpon in the Florida Keys National Marine Sanctuary, right? And so I think just getting better at telling those stories, I think that's at least part of what would hopefully get at some of what you're saying, Stuart.
I guess I'd throw it back at you, Stuart. You work with them all the time. What do you think they need to get more engaged in this conversation?
Yeah, I think I'm asking the questions, for those that don't know, World Ocean Council is headquartered and has been since 2022 in Barcelona, and the port and the city in Barcelona are extremely advanced and aggressive on blue economy and the intersection physically of everything from huge cargo to ferries and cruise ships to marinas to the America's Cup, yacht repair. I mean, when I sit in my office there, I see that entire spectrum. So it's a question that for Boston, right? It's more like, how do we get more of that? And I think you'll hear from the next panel, right? But this is where you start to think about all those layers,
Yeah.
which I'll be asking the panelists about. But I think you're touching on the thematics and sort of how we do the investments. So I think part of it is finding those models. But like your experience in Boston, I think, others could learn from.
Yeah.
Boston could also learn from Barcelona.
Yeah, and that local, sort of decision to care and to pull innovation in is nobody it needs from the top a mandate, right, within the ports, right, because there is nobody's job in most of the ports to address innovation. It's a rare breed of port that has the job, where there's somebody's job to care about innovation. And so if it's not anybody's job, then it's someone's hobby, potentially, or it doesn't happen. Because we've gotten a lot of startups who we connect to various ports, and they're like, yeah, that's cool. Right? Like, cool. Love that. Yeah. What do we do with that? No. What do we do with that, though? That's not a sale. So I do think that there's a lot that that we can do to break down procurement type barriers as a ecosystem.
Yeah, and you see that in San Diego and LA and Seattle. You see it in some of these other locations. There's people who are working directly on that. But,
This is hard.
Yeah, LA Port's a very good example. We're in our last 5 minutes. What I'd like to do is go to Millie, Sam, and then I'd like to give our panelists an opportunity for some closing remarks. Millie?
Okay, a fun question for John. The guy you sat next to on the airplane, is he an orthopedic surgeon from Southwest Ohio? And he goes there once a week one week a month?
It very well could have been, Millie. I'm not sure. We were
That's a
we
very
were
specific
getting
question,
off
Millie.
the plane. I didn't have a chance to ask him. What? Yeah.
Do you know Millie Fitz?
One week a month he goes tarpon fishing. He lives in Ohio, so I get your point. Now here's my
Yeah.
question.
Okay.
I was really struck by something that Sarah, right, and Alyssa said, and it hit a nerve. I think you said the pipeline is full of non-investable startups. Did you say that?
Yes, but not in the sense that they're not investable, in the sense that they're not translated well for investment. Yeah, they're very investable. They're just not being presented in a way that can be read by investors as investable.
And you said, sometimes we meet these founders and we say, thank you very much, but no, thank you, and maybe there's other ways for you to business stuff. So I think there is a chicken and egg problem in the investment piece of this. There is a lot of noise and clutter. I'd hate to be an investor trying to sort through all of this. And I think some just aren't even investable, honestly. So you have the ones that truly are not investable. They're great people, they're passionate, but no one is going to invest in what they're selling. And they're not solving a problem or, all these things. And I think this is a fundamental problem, and I think that all of us in the room, we help perpetuate this problem. We are not helping these people exit out of the system, and some need to be exited, to be brutally honest about it. Thank you very much, but no thank you. And I do think that a lot of smallish grants, state, federal, philanthropy, keep some of these going, and I can name some of them, and you would know who they are, and I'm not going to name them. And they get enough grant that they're there for another year. They're not going anywhere. This solution is dead on arrival, and I think until some of the supply issue gets fixed, the demand for the investment is going to continue to be more difficult. So I'll let you any comments about that.
Woo, Millie. Hitting hard.
The grenade and I threw it on the table.
Yeah, no, I agree. And we've been having a conversation about how we communicate the wins too, right? Because part of the challenge with pulling in capital is that people are like, okay, show me the exits. And so we need to have those like right at the tip of our tongues, right? So that we could be like, okay, well, do you know about Kerecis? Do you know about like this? That was $1.3 billion, right? And so we need to have some of that. But I think there's also the courage to tell someone when venture capital is not the pathway for them, and it's not going to be a good pathway for them, because it could be a there are still investors for things that are not venture capital oriented, right? Or like that are going to be good venture capital deals. But if a startup gets money from a venture capitalist and it's not suited toward venture capital, that's a death sentence too. So like how we help our the startups in our ecosystem either to know that there's not a scalable opportunity, and so therefore they should reapply their talent elsewhere in the marketplace of ideas, or that the sliver of capital they've been going after, they haven't been successful in, because that's not the sliver they should be pointed out, is really important, right? And that there are people who care about the economic value in their local community who might be willing to invest in something that isn't going to drive a 10x return because they are small business oriented, right? Or there's other ways to stack up this capital, which I'm sure we'll talk about with Kelsey's panel later. But we need to be straightforward about it. Otherwise, we're not doing anybody any favors, right? By telling them, get a little more traction and we'll see you later, right? That's like, that's not really helpful.
We have a program in Wilmington for entrepreneurs. We do it once a year. We call it Tough Love Day. And we bring in 4 or 5 entrepreneurs from the community. We sit them in front of 3 or 4 judges, and they crucify them. They put them under the fire and tear apart their presentations, tear apart their products, and see if they are seasoned enough to be taken to a VC.
Okay.
And very few survive.
That sounds terrible.
Sorry, Sam,
but
we're out
needed,
of
right?
time, but
It's needed.
do
You
a
have to
quick-
have that conversation.
Yeah. Let's go to Sam really quick as we close out.
Just real quick, Sam Teicher, I run Coral Vita, we're a venture-backed coral restoration company. And so there needs to be more focus on biodiversity, nature-based solutions that are addressing coastal resilience, ecological infrastructure, fisheries, and there needs to be better education for investors that if they care about sustainable fisheries and marine protected areas, that they also need to look at nature for whatever reason. If they hear corals don't sequester carbon, they put them all down. And so it's not really an answer, or to say that as a company that raised Series A, that won the Earthshot Prize, and I'm saying this thing less like I'm trying to cut myself on the back, it's more that we're hitting all the proof points investors want to see, and it's still not good enough for most investors. That needs to change.
But that's because we measure what we value. And if we're not doing the measurements, then nobody can compare the things to each other, right? And so everybody's like, oh, like what metrics do you track? And I'm like, well, shit, have you seen the Thousand Ocean startups? Like it's like 30, there's like 33 of them, right? And like I can't who can communicate 33 metrics, right? Like the carbon people have it like relatively easy, right? They're like, boom, 10,000, whatever, a gigaton, this, right? How do you communicate that as simply? And I haven't seen anything come out yet that simplifies the value of nature enough for a third grade audience.
Yeah. Well, I'd say, recently Goldman Sachs came out with a report stating nature is investable. So they're starting, and it is. It's the very beginning of that conversation. So I understand your frustration because you're deep into it, but the financial world and the VC world, they're new to it. You're seeing T. Rowe Price, Morgan Stanley start putting it into some of their analyst reports, but it's on page 12 of the sustainability section. It's not front and center yet. And I think Blue Economy is missing that aha moment where we pull those reports from page 12 up to the front cover. We haven't had that aha moment yet in the Blue Economy. I don't know how and when it comes. Space has had it. Other industries have had it. Eventually, Blue Economy will have it, and then we'll get there. Time and patience, unfortunately.
So one final comment from Sarah, and then we are out of time. So
I agree with you. And I think speaking to Coral Vita, what you've done super well, in my opinion, is you've done the storytelling very well, and you've also created a go-to-market that is a clear monetizable market. So you've made a really good linkage between the impact and the returns, and your business model is strong. But you don't see that in a lot of these nature-based investments, even if it could be like that. So I think I would also turn it back onto the nature-based solutions scene to say, figure out how to tell the story in a way that's going to make sense to investors as well as conservationists, right? Because there are those pathways, and you did a very good job at finding them, but I think if other groups that had similar solutions could tie it a little bit more to data, could tie it a little bit more and tell that story and weave the narrative and show the go-to-market and the financial potential, then there would be potential for a lot more investor traction. As for you, if you're not still getting it, I don't know why, because you guys are awesome. Just a little plug for Coral Vita. Yeah.
So thank you all for participating in this conversation. Please join me in thanking our wonderful panelists for an incredible, thoughtful point. I learned a lot of notes.